Hi, my name is Salman. I'm a financial advisor, and today I want to talk about what does a financial advisor even do. In my next video, I want to talk about do you need a financial advisor or not? And in order to do so, what I want to answer first is what do I even do on a day-to-day basis professionally? I think a financial advisor tries to channel the following 4 points into one bigger concept. And those 4 points are the goal formulation and quantification. That's point number 1. Point number 2 is asset allocation. Point number 3 is insurance analysis in terms of need and what is available. And point number 4 is tax awareness. These 4 points, when I'm talking to clients, are then being channeled into a concept that then is being proposed as a solution to the people that I'm speaking to. And so when we are looking at financial planning, what is it that we want to do initially? Initially, we want to formulate goals and we want to quantify them. If we know what we want to achieve and when we want to achieve it, we can calculate how much we need to put in and what the effort it is going to take from us in order to, let's say, for example, buy the apartment that you're looking to buy in 5 years, or to achieve financial independence over the next 20 to 30 years. These can be specific goals that a person has, and the question then is, how can I, based off of my situation, achieve those goals most sustainably and quickly? The idea of asset allocation then becomes, well, if I have a goal that is rather short term, then I do have a different need of security and flexibility of my wealth. And then again, I need to also pay attention to my financial situation. If my income is really high and my expenses are relatively low, then I can also be more aggressive in my asset allocation and put my money into assets that are going to provide me with higher returns for the price of higher volatility, so risk. The third point being the insurances. They're meant to be a security in case of things going, unexpectedly wrong. When you're building wealth, what you want to do is you want to avoid having to sacrifice that wealth that you've built for, let's say, purchasing the real estate or your financial independence. You don't want to sacrifice that wealth because something went wrong that might have a relatively low statistical probability, but when it happens, might danger your goal. And the fourth point is tax awareness. Well, if you're looking to build wealth, one of the main things that is going to reduce your gains is going to be taxes. And when you are investing for short periods of time, there's not much necessarily that you can do in order to avoid taxes. There's not much that a private individual can do to save them. But especially when we're considering long-term implications of goals like financial independence, then being aware of how taxes work and being aware of how you can create a system that is going to provide you with the highest output based off of the individual time horizon is really, really important. Those are generally the 4 things that I look at when I'm doing financial advisory. And when I'm speaking to a client, I'm also looking at obviously their emotional situation and their experience level. And based off of those 4 points and the combination of their experience and their emotional state, be it whether someone is more risk averse or likes to take more risk, I then come up with a concept that tries to reach those goals as quickly as possible and as comfortably as possible. I hope this video helps, and looking to see you in the next video where I answer the question, do you need a financial advisor, or can you save the cost that one creates and do it all on your own?